Asian markets mostly rise as investors weigh inflation data coming from Japan. UK inflation jumps to a surprising 3% in January, exceeding expectations. And the G20 summit kicks off in South Africa, championing solidarity and sustainability amid global tensions. Hello, I'm Toba Aydin with the latest business and finance news here on TRT World. Shares in Hong Kong rose to a three-year high, leading gains in the region as investors weigh inflation data from Japan. The Hang Seng climbed to 2.95% to its highest level since February 2022, while the Hang Seng Tech Index gained 4.7%, led by e-commerce giant Alibaba, which rose 11% on better than expected earnings. Meanwhile, Japan's Nikkei 225 slipped 0.43%, while the Topix declined 0.3%, as Japan's inflation rate in January climbed to 4%, hitting its highest level in 2 years. The yen retreated on Friday from an 11-week high of around 150 per dollar following the jump in Japanese inflation. Meanwhile, gold prices surged to a record high on Thursday as fears of a global trade war sparked by US President Donald Trump's tariff threats fueled safe haven demand for the precious metal. For more on this, we're joined by Josh Mahoney in London. He's chief analyst at Scope Markets. Now, Josh, how could the rise in Japan's inflation rate influence the Bank of Japan's monetary policy going forward?
In a big way. I mean, ultimately, that's going to be the core metric that they follow when it comes to setting their monetary policy pathway. And this rise that we've seen across Japanese inflation has been pretty stark of late, like you alluded to, the headline number up to 4%, also seeing a rise in the core figure up to 3.2%. This comes off the back of hotter than expected GDP data. We've seen the PMI data moving towards the upside as well. And so everything really seems to be heating up over in Japan at the moment. In terms of market expectations for the BOJ, we're not necessarily seeing a huge amount. We're only seeing sort of 25 basis points for the coming months. But if data keeps moving in this current direction, there's a strong chance that we're going to see more than that. And certainly if you look at wage data, which often leads inflation data, that has been moving higher and indicating the pop that we're seeing for inflation right now.
Right, moving on, investors seem to have mostly shrugged off those initial tariff fears, particularly as we're seeing in Hong Kong. What's the general sentiment across markets?
Yeah, I think part of it comes down to the fact that a lot of these tariffs keep getting pushed back, right? So originally we were talking about Mexico and Canada, then suddenly there was a 1-month delay. Now we're talking about China and a potential trade deal between the two countries. So those tariff sort of jitters are kind of around the corner, but it does feel like this is certainly a tactic from Donald Trump to be able to get people to come to the table or to get more advantageous deals that might see people investing into the US or buying US goods. And that is a good thing anyway, even if that does come to pass. So I think markets came into this Trump presidency on a high, feeling positive about it. We saw some jitters, but the more he delays things and pushes things back, it makes you think that in actual fact, maybe we should sort of stick to our first decision and feel optimistic. And that's why we've seen significant gains across the board.
Right, we'll have to leave it there. Josh Mahoney, Chief Market Analyst at Scope Markets. Thank you very much for being with us. Meanwhile, inflation in the UK has jumped to its highest level in 10 months, putting more pressure on the Labour government as it looks to revive a slowing economy. Consumer prices rose by more than the expected 3% in January, compared with 2.5% the previous month. Core inflation, which excludes volatile factors like energy, food, alcohol and tobacco, stood at 3.7%. Services inflation, a key concern flagged by the Bank of England, increased to 5% from 4.4% in December. Higher airfares and food costs were the main drivers behind the increase. Meanwhile, a sharp rise in education costs following the Labour government's decision to impose a surtax on private schools also pushed inflation higher. The hotter than expected inflation data has sent the British pound surging. The currency initially hit a 2-month high against the US dollar before giving up some of those gains amid stagflation fears. Earlier this month, the Bank of England reduced its main interest rate by 0.25 percentage point to 4.5%, marking its third rate cut in 6 months. However, an increase in inflation is likely to dampen expectations of further interest rate cuts in the near future. High borrowing costs is a major headache for the Labour government, which has pledged to reboot economic growth. And for more, we're joined by Vicky Price in London. She's a board member at the Centre for Economics and Business Research. Good to have you with us, Vicky. Now, how will this 3% inflation impact Labour's growth plans?
It's a problem for them, although the Bank of England, as you rightly say, had already been anticipating this increase in inflation taking place. A lot of it is temporary. That's the way that it is being looked at present. One of the issues is indeed, as you again suggested, an increase in school fees because of VAT imposition on private schools, which is the first time it's happened. So this is a one-off with a bit of luck. We've also seen that transport costs have gone up mainly because bus fares have gone up across the country. So that's another one. So in a number of cases of that increase, if you just look at the items, it has been government policy that has caused that, plus of course some external factors like energy costs and electricity price cap going up. So the Bank of England is reasonably relaxed. So of course higher inflation affects people negatively, but real wages have been there for quite some time, increasing for quite some time, so wages are rising faster than inflation. In fact, the latest wage figure was about 6%, 6.2% actually in the private sector year on year. So there is quite a nice gap for many people. So there is a bit of hope that people will go out and spend that money, and therefore growth will be resumed, because of course we have had almost no growth in the second half of 2024, and the government is counting on A, interest rates coming down further, and B, the consumer going out and investing. There are some serious issues and concerns, particularly what may happen to investment, because business confidence is quite low right now because of the changes in the budget of October the 30th, which added extra costs to businesses. So those are issues which the government will need to tackle. Plus, of course, what it may need to do in terms of spending more on defence. Does it mean it's going to be cutting back in lots of other areas? Loads of uncertainties around. But the inflation increase is one where we can be reasonably confident that yes, it will go up a little bit more in the next few months, but in fact it is probably on a downward trend.
And with services inflation rising to 5%, will this allow the Bank of England to cut rates further?
It's a good question, because that's the one that they focus on. Interestingly enough, they had been expecting a faster increase in service inflation of 5.2%. In fact, it's only 5%. Wages, as I mentioned, are going up, and services are affected directly by that. And I think, again, this is an area where they're reasonably hopeful that this trend will slow down in the future. So they will worry about it, they will look at it, as they've said, but I think they're feeling reasonably confident that it isn't going to be a major issue ahead.
Right, Vicky Price from the Centre for Economics and Business Research, thank you very much for your analysis.
Thank you.
Meanwhile, the UK government has announced a multi-billion-dollar plan to boost the UK steel industry, while US President Donald Trump's tariffs loom. Tulay Kalyon Haznederoğlu has more from London.
The UK government rushes forward a more than $3 billion investment in the UK steel industry as Donald Trump prepares to impose 25% tariffs on all imports of steel and aluminium into the US. The UK Business and Trade Minister Jonathan Reynolds says UK and US have a mutual interest. They could negotiate on an exemption from President Donald Trump's plans for the 25% import tax, which could come into force in March. But previously, President Trump said there will be no exceptions or exemptions. In 2024, the UK steel industry fell by 29% from a year earlier. In 2023, the UK steel industry contributed $2.2 billion to the UK economy. And the UK steel sector directly employs 33,700 people. But Port Talbot in Wales already cut 2,800 jobs last year, and another 2,000 jobs are at risk at Scunthorpe. Now the government promises support for the steel industry and launches a consultation on its plan for steel. But critics say action is needed now. The opposition is calling on the government to take a tougher stance and negotiate directly with Washington. With the clock ticking, all eyes are on Downing Street and the White House. Will Britain secure a deal, or is the UK steel industry about to take another major hit? Tülay Kalyon, Hazındaroğlu, TRT World, London.
The US Secretary of State was notably absent from the G20 Foreign Ministers meeting on Thursday. Marco Rubio has boycotted the meeting in protest over South Africa's land reform program. But his absence didn't stop the country's president from appealing to leaders to come together to address issues affecting the developing world. Tuso Kumalo reports.
The G20 president's theme this year is solidarity, equality and sustainability.
The nations of the world look to the G20 for leadership, for inspiration, and for guidance on the most pressing issues confronting our world, more so now at this time in the history of our world. Just as cooperation supported the progress of early humans, our modern-day challenges can only be resolved through collaboration, through partnership, through dialogue, and through solidarity.
Turkey is represented by Foreign Minister Hakan Fidan. In a series of closed-door meetings, the foreign ministers are looking at solutions to global geopolitical challenges, including the war in Ukraine and the shaky ceasefire in the Middle East. On the Africa agenda are possible solutions to ending the war in Sudan and the Democratic Republic of Congo. South Africa is explaining to G20 counterparts its policies and commitment to the rule of law and human rights after the USA slapped it with 8 sanctions over its land reform law and allegations of human rights violations. To drive that message home, the International Relations and Cooperation Office says a series of sideline meetings have been set to address these issues.
We're hoping that at the working group level that we'll have sufficient representation from the US to ensure that their views are heard in the G20, so that by the time they take over the presidency, they take over a set of goals that they can actually work on.
South Africa says it wants to use its G20 presidency to advocate for development issues in the global south and the African continent. Delegates are also expected to tackle issues of climate change and the effects of AI globally before the summit ends on Friday. Tuso Kumalo, TRT World, Johannesburg.
And Tuso Kumalo joins us live from Johannesburg. Tuso, tell us, how will South Africa's G20 leadership foster global cooperation, particularly with conflicts in Ukraine, Sudan and the Democratic Republic of Congo?
South Africa has made it clear that its G20 presidency is going to be inclusive of everyone. President Ramaphosa, in his address when he opened the meeting, saying he wants more countries coming in, and we know that there are countries that have already been invited. Deep in the meeting here, what they are discussing is to find a way as to how they can resolve the crisis in Ukraine. In Africa, we've got the war in DRC. South Africa's approach really is that people should sit down around the table and these issues be discussed. It has said it doesn't support any war. So it believes wherever there's a confrontation or a conflict, it believes countries should sit around the table. Negotiations should be done. We know that South Africa itself is coming from apartheid, and to end that apartheid, South Africa had to sit down with the colonizers, and the solutions were made. A constitution was drafted. This is how you've got this diverse nation that South Africa is calling a rainbow nation. So South Africa's approach is that the G20 countries should lead in terms of sitting down the parties that are conflicting in DRC, the parties that are conflicting in Sudan, in Africa, as well as parties that are conflicting, of course, in Ukraine. And we know that we've got the Middle East also crisis there, that shaky ceasefire. South Africa saying it's key that parties sit down, and it wants the G20 countries to lead in that.
And with US aid sanctions over land reform and human rights concerns, How could these tensions disrupt South Africa's G20 agenda on equality and sustainability?
Speaking to the officials here, South African officials, the Office of the International Relations Department, they expressed their concern that the US is not represented at the highest level by, of course, the Secretary of State. But they've also said that they are happy that at least somebody from the embassy of the US is here to represent them. And for South Africa says the theme that is pursuing now, solidarity, equality, those themes were approved by the shepherds who met and the countries that decided that those are the correct theme to happen. So it says it wish in the coming meetings, it will be able to convince America that this is the right way to go. Everyone should be included. All countries should be treated equally, so that there's no poverty in the world. South Africa believes that the reason why you have got other countries not treated the same as others or not benefiting from the global economy like others is because others are not equal to others. Others are more equal. So South Africa says there's need to equalize, there's need to have mutual respect and mutual benefit. Of course, these sanctions or the suspension of aid in South Africa is going to have an effect. But South Africa, President Ramaphosa yesterday said he believes in diplomatic talks. So he's going to engage the US in the coming meetings, and is also trying to find a time to meet President Trump to try and resolve these issues and explain the theme of South Africa, explain the laws of South Africa, because South Africa believes that it is out of misunderstanding that the US is misinterpreting this. Ramaphosa emphasizing yesterday in the meeting that it's not in a briefing that it's not that South Africa is expropriating land willy-nilly, but it's following the constitution. It's not doing it arbitrarily. It's trying to correct the ills of the past, what happened during apartheid, where the blacks were dispossessed of their land.
Right, Thuso Khumalo there in Johannesburg for us. Thank you very much for your time. Now a quick look at some of the other top business stories from around the world. Walmart's shares dropped after it forecast slower growth for this year, missing Wall Street's expectations. Despite reaching the highest ever worldwide sales figure of $681 billion, the company predicted only 3 to 4% growth in net sales for 2025. The cautious outlook, partly due to geopolitical uncertainty, led to a 6% fall in Walmart's stock, marking its biggest one-day drop in 15 months. Standard Chartered pre-tax profits dropped 30% in the last quarter of 2024 as the era of rising interest rates came to an end. However, the London-based bank reported a 19% increase in annual pre-tax profit, fueled by record growth in its wealth business and strong market performance. To further bolster its outlook, the bank announced a $1.5 billion share buyback and raised its earnings target on Friday. The US Department of Justice will drop its case against SpaceX over claims the company refused to hire certain immigrants. It said SpaceX did not consider asylum seekers and refugees for jobs, but SpaceX denied wrongdoing, saying strict export laws limit who they can hire. And Netflix plans to invest $1 billion over 4 years to produce films and series in Mexico. The company will work with the local creators and production houses to strengthen the economy and highlight Mexican culture. Co-CEO Ted Sarandos also said the recent film Pedro Paramo contributed $18 million to the economy and generated thousands of jobs. Germany heads to the polls on Sunday, and one of the biggest issues for voters is, of course, the economy. As the cost of living increases with rental prices on the rise, living standards are declining. According to a study, 17.5 million people in the country are now affected by poverty, 5.4 million more than previously calculated. Shadia Edwards-Dashti has more.
High rents and a shortage of new builds is pricing people out of homes in Germany. Ahead of Sunday's snap election, it's a top issue among voters. Many young people are living paycheck to paycheck, struggling to make ends meet. Chris and his partner live in Berlin and have been forced to tighten their belts.
So essentially housing, like rent especially, is a big issue in Germany at the moment. The prices are going through the roof. Essentially, if I were to move in the same area here with a new apartment, my rent would essentially double. Not only did we not manage to save money anymore, we actually had to put more money into the joint account before the month ended because there was no money left.
Chris is by no means alone. Germany is a nation of tenants with more than 50% renting, compared to an EU average of around 30%. At the end of the month, people spend almost half of their income on rent. In the last 10 years, asking rental prices surged by 50% nationally, while existing rents grew by 20%. To make matters worse, when an apartment goes up for rent in a big city, hundreds of prospective tenants line up down the street to view it, scrambling to find a place to live. All of this is driving inequality as the less well-off struggle to compete in a crowded market. It's all playing into the hands of the AfD. With money tight and wallets empty, people want change.
People are more open to these radical parties and these radical ideas and things that are saying because the politicians in power at the moment are not listening to the people's concerns. Yeah, and people feel like, okay, if no change is happening with these parties that have been voting for this entire time, then I vote for somebody else and I hope change will come. But that change might most likely not be the change that they want.
There is no quick fix. Germany needs around 800,000 more homes to deal with demand. Previous governments have made and broken such promises. Economists don't expect this election result to be any different.
It isn't economically attractive if you would be an investor to build a house, given the current economic situation and the low inflation rate, that you cannot refinance the investment. So that's part of the story why there is no more economic activity going on in the real estate market, and that doesn't fix the problem.
Regardless who wins on Sunday, revitalizing Germany's flagging economy is unlikely. But that won't stop voters casting their ballots in the hope change will somehow come overnight. Shadi Edwards-Dashti, TRT World, Berlin.
Paris is taking a significant step in tackling its housing shortage. Much like other major European cities, it's cracking down on illegal short-term rentals, imposing stricter rules and hefty fines, as Lara Kluchastan reports.
Paris, the city of love, draws millions of tourists every year. But behind its postcard charm, locals are struggling to keep their homes. Around 67% of Parisians are renters, while just only 33% own their homes, as thousands of apartments now accommodate visitors. Rents have soared, pushing families out of neighborhoods they have lived in for generations.
Our goal is to put an end to this illegal business and bring these homes back into the rental market. 25,000 homes, that means 50,000 people can live in Paris again.
France's illegal short-term rentals reportedly generate about $1 billion a year for homeowners who rent out their properties. But Paris is fighting back. Government says fines for illegal rentals has just doubled, and Airbnb must now ban rule breakers or face penalties. As of January, new rules limit short-term stays to 90 days per year and require owners to register their properties. Illegal landlords now face fines up to $105,000 per property. However, Airbnb says the measures won't solve the crisis.
Our goal is to put an end to this illegal business, these entirely unlawful profits, and to bring these homes back into the rental market for Parisians.
Meanwhile, Paris isn't alone in this fight. Cities like New York, London, and Barcelona are also struggling with housing shortages fueled by short-term rentals. In Barcelona, rents have surged 68% in the past decade, while home prices jumped 38%. And now, the city has announced plans to ban tourist illegal rentals to bring balance back to the housing market.
The target is multi-property owners who have decided to turn it into a business. People buy several apartments, sometimes entire buildings, and convert them into illegal hotels. These are the ones being sentenced by the courts. They are our targets because they are the ones, in effect, are depriving Parisians of housing.
Paris is cracking down on illegal rentals, hoping to ease the housing crunch. But will tougher rules make a difference? For now, the fight for affordable living in Paris is far from over. Lara Kılıçarslan, TRT World.
Many mining companies worldwide posted lower than expected earnings in 2024. Commodity prices dropped due to a reduction in demand from major economies like China, and energy costs rose due to conflicts like the war in Ukraine, which in turn pushed up operational costs.
Glencore's earnings fell 16% to $14.36 billion in 2024, down from just over $17 billion in 2023. It marked the second consecutive year of lower profits for the company, and Australian mining company BHP logged their lowest first-half profit in 6 years. Profits were at $5.8 billion for the 6 months ending December 2024, down 23% from a year earlier. Rio Tinto reported revenue of around $53.8 billion for 2024, a slight decline from the previous year. This is as lower commodity prices and operational challenges stifled output. Heavy rainfall and cyclonic activity in Western Australia led to flooding in mining pits, leading to higher production costs. This year has been rough for some of the biggest mining companies, with their collective market cap falling. According to Mining.com, the top 50 largest miners are now worth $1.35 trillion, losing a combined $126 billion over the course of 2024. This is as the copper rally faded and gold stocks underperformed. Last year's combined market cap is $480 billion below its peak in the second quarter of 2022. This period saw mining firms riding rallies from uranium, nickel, copper and gold.
And that's all your business news for now. Thanks for watching.